The likelihood of a debt deal sent stock prices soaring in early trading today, but then came a report that showed that the economy is still in a lot of trouble. U.S. manufacturing in July fell to the lowest level in 2 years. And with that news, the Dow gave up its gains and closed with a minor loss of more than 10 points. Avoiding default does not necessarily mean that the U.S. government will be able to keep its top credit rating. We asked senior business correspondent Anthony Mason to find out why the credit rating agencies may still downgrade America.
It may not be enough. The debt ceiling deal calls for more than $2 trillion in spending cuts. But the agencies that grade America's debt want more. Standard & Poor's called for $4 trillion in cuts in its July report. Otherwise, the rating agency's president told Congress last week our $14 trillion debt will continue to rise.
And the growth rate of the debt burdens is something that does need to be addressed for us to continue to assess the creditworthiness of the sovereign's commercial debt at AAA levels.
The United States credit rating has never fallen below AAA, and it would be an embarrassment, says economist Michael Darda.
But it's hard to see how the rating agencies are going to tell bond investors anything that they don't already know.
Investors have not been scared away yet. They're still buying up U.S. Treasury bills. But a downgrade could drive up interest rates and the cost of borrowing, affecting everything from auto loans to mortgage rates.
You definitely would have a dampening effect on the economy. Would it be Armageddon? No.
Economist Ellen Zentner.
I don't believe that a downgrade to our creditworthiness would really make the average investor think that the U.S. cannot pay its bills.
We're still essentially going to be the gold standard.
We are, but only because the comparisons have been lowered so much.
The competition is pretty weak.
The competition is weak.
But there could still be collateral damage to the economy. The AAA credit ratings of 7,000 state and local governments, universities, and nonprofits like the Smithsonian Institution have also been placed on review because of their dependence on federal funding. Downgrades could mean higher local taxes and more job cuts. Scott?
Thanks, Anthony.